All right, welcome back. My guest is joining me right now from Lagos. He is Adeniyi Adebisi. He's the wealth advisor at Meristem Wealth Management. Hello, Ani, and thank you for joining us on the show today.
Good morning, Nancy. Good to be here this morning.
Good morning. Ni, where do we start from? We're talking about wealth creation amid economic uncertainty, which we're seeing across the world, not just about Nigeria. So much, people are living through tough times right now. The cost of living crisis is not just affecting Nigeria, but almost everywhere around the world, both the developing nations and the developed nations. But let me start with a basic question, which is, what is wealth? That's the A part of the question. The B part of the question is, what is wealth creation? When we talk about wealth, does it depict the Warren Buffetts of this world, the Elon Musks of this world, the Aliko Dangotes of this world? So that let's set that basic definition.
So, for wealth creation is basically the ability to create value from what you have. Not necessarily, at the scale of Dangote or $10. But the point is, everyone can create wealth at their own level, given their income. You can create enough wealth. You can use what you have, whether capital, whether financial capital or human capital, to develop wealth. So it isn't about money every time. Sometimes it's most of the time it's about value that you can create from what you have.
So you mustn't be, from your definition, you mustn't think about being like the Jeff Bezoses of this world or the Dangotes of this world for you to have a mindset of creating wealth. Is that what you're saying?
Definitely. You have to start somewhere. They started somewhere. We know them today at current where they are because, over time, over the years, they've been able to develop themselves, also empower themselves and invest in the right business at the right time, to get to where they are today. So everyone has to start somewhere, humble beginning, and that's what's important. And if you do that consistently over time, taking the right decisions, taking the right actions, and being able to, maneuver yourself around, the economic situation, definitely you will get there. So it's a journey. It's not an action. It's not something that happened overnight.
Okay, so it's not a destination per se, but it's a journey. In the Nigerian context, let me bring it home a bit. Can you actually create wealth with like 50,000 naira?
Definitely, definitely you can create from as little as even 1,000 naira nowadays, depending on the vehicle that you want to, use to create wealth. You can invest in financial assets. There are mutual funds that are available from as low as 10,000 that one can invest into market today. And you can buy stocks from as little as possible also. So it depends on what you're like. You can even trade from as little as 50,000, but someone who hawks, stuff on traffic, for example, they are trading, and that's a business. You're able to buy a few drinks and you're able to sell, make profits, and then plow it back again. So that's wealth creation. As long as you're putting in money, you're using the money properly, and you're generating some level of income in addition to your principal or whatever you have invested, you're creating wealth. So as I said, that it really doesn't matter where you fit in society. Everyone can create wealth.
I really want this show to be as practical as possible. So there's not as if we're just talking off the cuff or we're saying things that my viewers will not believe and say, oh, Nancy has come again, and all of that. We just want to make it as basic and practicable as possible from what you're saying. That's why I asked you that question. With 50,000 naira, can you actually build on that and create wealth? And that was the answer you gave. So what I can deduce from what you said is that perhaps should I put it this way, that there's a science of getting rich or a science of getting wealthy. Just forgive me, I'm a science person, so perhaps science just comes to my mind easily. That there's a science of getting rich or getting wealthy. Is that it? And I think there's a book like that by Waffles, if I'm not mistaken, The Science of Getting Rich. So for you to build wealth or create wealth, must you abide to the laws of wealth creation?
Yes, you have to. We said earlier that it's a journey, and if you do it consistently over time, you're able to maximize the opportunities available to you. And this is the power of compounding. If you put in naira today and you keep rolling that over time, reinvesting that money over time, even without investing extra, it would grow over a long period of time, and you can even double your wealth over time by just investing in basic, fixed assets, fixed instruments that are able to compound over time. So it doesn't matter. I say, so that we break it down, as you said, in layman, you can put in 10,000 into a trade, for example, so that we go into a trade and you buy stock, you sell them, and then you take back, whatever amount that you have invested initially, and then buy another one, and then you put back whatever gain that you have made from the first sale into the next sale, and then you sell again, and you keep doing that over time. What you realize that if you continue to do that over a period of time, what you realize is that as long as you keep putting back your returns into the business, it keeps growing. And that's how it works, whether it's investment or whether you have a business or an entrepreneur. If you keep putting back your earnings into the business, it will definitely grow over time. That's, buying on any other things like action or whatever stance that may happen. But the point is that you can keep going well. But it's gradual. I know that there's a lot of noise around doubling money, in quick time. That's not what I'm talking about here. I'm talking about taking actions over a period of time to increase the value of what you have. Not putting 100 naira today and making 200 naira tomorrow. That's not what I'm talking about. I'm talking about putting 100 naira today, making 10 naira, putting 10 naira next day, making 120, and then going on like that over a period of time.
Okay, Niyi, let's bring it home a bit in terms of the Nigerian wealth creation market, so to speak. What are the wealth creation tools that are available for people right now to take advantage of and to build wealth, that's to create wealth, and also to upscale it in the Nigerian context now? Okay. I like that you talked about Ponzi schemes, not money doubling, which we'll come back to in a bit.
We are all unique. Everyone is unique. Everyone has an objective. My objective is different from yours, Nancy. And that's how it is for everyone, out there. So what your objective would drive the type of investment or the type of wealth you create. If you want to be a businessman, that means you start a business. If you're an employee and you want to put out, you want to invest your savings, that means you have to look at other financial assets where you don't need to make, take too much action. But one thing is very critical is speaking to advisors. Everyone knows it. Everyone that they know everything. But the point is that you can't, if you have to go to the hospital when you're sick. So when you also need to deal with your financial issues or wealth creation, if you have questions, you also need to speak to advisors because they will guide you through the process. Identify what your objectives are, what your current situation is, what your risk appetite is, how much risk can you take, and then that would then form the basis of the type of wealth or direction that you go. So it's very important that you take those steps, identify your objective, look at your situation, appraise yourself, then look at your risk appetite, how much, and then that would then form a base that would allow an advisor to advise you and also guide you going forward. And from time to time, you also have to review your situation because what we are today is not what we had 2 years ago. There was COVID, now there's Russia, Ukraine. These externalities are, they have a great impact on us, both as human and also, our wealth creating opportunities available in the market. So you have to go take step by step so that, you're able to achieve the right objective at the end of the day.
Okay, so the key takeaways from what you've said, of course, you have to know your risk appetite, and I guess that age also plays a role in this, and your objective at the end of the day, because you may say, okay, I want to really create wealth because I want to retire early. My risk appetite is like perhaps moderately aggressive, or I can be so aggressive. I'm still young, perhaps I'm about 20, and I have like active 30 years to work, and I can actually take risk and all of that. The one important thing which you also said is to speak to advisors. Do you see Nigerians doing that often? Especially, this is the market where you play in, really. I guess I'm thinking that it will be a bit difficult, especially for a country that have many poor people. It's the elites that may be speaking to you, but how do you get the bottom of the pyramid, really, to understand that even in your low situation, you can actually make something out of it?
Yes, we like to self-medicate, a lot here. So yes, people don't see it as, something that they should ordinarily do. And maybe sometimes people feel that it's expensive to speak to someone, to an advisor or to an expert. But a lot of times these things come for free. You can walk into, I think, for example, I can reach out to you to ask you for advice, for example. It may not cost me anything. So the idea is even that people need to be open to that idea itself of talking to other people who know better than them, people who are experts in a particular area. If you have health issues, speak to your doctor. If you have stuff around engineering, speak to an engineer. You just go talking to people who know better, just so that you can form a better opinion, about whatever it is you want to do. So yes, it's not great right now. People don't fancy it so much. People don't reach out as much as we expect people to reach out. But it's getting better. People with everywhere is open now. The social media and the digital age is better. People are able to get access to more information, through all these mediums, and people also reaching out. It's better compared to 10 years ago. No, we have made some progress.
I like the idea that you talked about. If you're sick, you go to the hospital, you go see a doctor. If you have an issue with, you get a lawyer. But people don't really think that I should also go see a money manager. Not banco, not go and put your money in a bank, but I should also seek advice as to manage my money. I don't know why people don't think about that. And I always say it on the show that every single day we get out of our house, we jettison out of our house with the speed of light to go look for money. And, the rudiments by which money is made, is spent, is invested, is saved, many of us don't understand it. So we should also seek a money advisor, so to speak, to also measure, our financial health and advise us better. That's what you're saying.
Yes, correctly. And in addition to that, I think there's also a big education gap. Also, you can't blame people for these things. How much do you know? So obviously we also need to do a lot of work on our side, myself, yourself, to get people more, to come on these platforms to let people know that, they can have access to an expert in this area also, and then they can get guidance, because information is very important in wealth creation and investments. If you don't know, you don't know. And if you get information very late, you can't take action. So it's very important that, we continue to do this. We continue to share our own knowledge, and we continue to talk to people across the country so that they understand the importance of doing this. It's not when you want to retire that you start planning. Planning should start now. The first day of work is when you start planning for retirement, for example. You start planning, for the kids that you're going to have. So it's a process, but I think it's getting better.
What demography are you seeing it get better? Because I don't know in the days of our parents if they had things like that. I'm talking about a larger percentage of them. Perhaps they were just, winging it and taking it as it were. A lot of perhaps our parents had that native sense, let me put it that, the native money sense to, increase money and all of that. Are you seeing it getting better now? Or is that a generation or an age demography that financial literacy around wealth creation and wealth management is it about the Gen Zs, the millennials, the baby boomers, and all of that?
I think it's more of digital age. There's more access. There's access to, we all have mobiles now. There's access to internet. There's access to everything. You can go on YouTube to, read stuff about. You can go on any of social media, Facebook, just everything, Twitter. You can get guidance from people for free. So I think it's more of where we point that we are, of digital age where information is available to everyone who's interested. Either you want to learn about it or you want to get advice on what to do or what not to do. It's just people are more open to also sharing their experiences, on these platforms also. So that makes it a little bit better. When I say better, I mean that the information is available, you can access it, and then obviously the means also is available for most people to do that. So that I believe is better.
Let's talk about and let's differentiate what we're talking about right now with money doubling or Ponzi or pyramid schemes, so that people don't misunderstand what we are talking about. So I would like you to further explain that we're not talking about bring your 10,000 naira now, and next week you will get 50K, like the MMMs of this world, what are the MB Forex, all of that, I want you to distinguish what we are saying so that they will understand.
Yeah, so yes, thank you for raising that. It's very important. What we're talking about we're not talking about doubling money, and that's not what we're talking about. You're talking about taking actions, driven, driven by your objectives is very important, and also investing in the right vehicle with the right party. So there's a lot of things involved here. First of all, you want to make an investment. you're dealing with the right party. You're also buying an instrument that suits your situation. So for Ponzi, it's a big issue also, and that goes back to education. When someone says that I'll give you, give me 100 naira, I'll give you 200 naira tomorrow, does it really make any sense? What would you do with the money, to be able to achieve that objective? And as they say, when it doesn't make sense, it doesn't make sense. And if you understand that, it doesn't make any economic sense for someone to be able to offer you that value, then you don't do it. And that's one of the key issues about, and that's why they keep going to, because people see it as a get rich, quick scheme, sort of. And that doesn't happen every time. Even though with traditional investments, you can lose sometimes, you can gain sometimes, but at least there's a guidance, there's a fundamental that's driving, all that we do and the actions that we take. And key also is the party that you deal with. There are companies that are regulated by both CBN, for example, and SEC, that can carry out these activities. So you just not, when you want to invest, also you can profile, the parties you're dealing with. Information is free now. You can go online and profile the party you're dealing with, and it's carefully, you can also tell whether they're regulated or not. So it's very important that we understand that when investing as an investor, you have to do your own due diligence about the company or party you're dealing with, about the instrument that's selling to you. Those are very key things I believe that people should take away from here.
Nee, do you think that the confidence that is needed in the space of wealth managers in Nigeria, or the asset managers or the investment advisors, do you think that Nigerians should have confidence in people like you when they come to seek for advice or invest their money, that we don't see some of the companies going belly up, and at the end of the day, the people that invested their money, some may even die from it, or some, would have long-lasting ailments as a result of the effects. I hope you understand what I'm saying. For guys like you and for companies that are involved in asset management or wealth advisory and all of that, how much confidence can we have?
So absolutely, I agree to that extent. I think that is because what we are now, regulation is is at a very good, better level. And the firms with this industry are very, very regulated, and I believe that the investors can trust the industry as a whole because of where we are, and in terms of the structure that has been put in place, and how there's been some sort of synergy between the participants and regulators to protect investors. That's like the primary thing here: protect investors, protect their funds. Because if we don't do that, we're going to lose the industry itself. Because if we don't have confidence in you, they don't bring their funds to you, or they don't seek advice from you, then the whole financial system itself may collapse that way. So, but we've moved ahead from that point now. There's more transparency. There's more firms understand that it's for the customers, it's for their clients, and not for them. And people are firms are getting more. How do I put it now? Firms are they're getting better in connecting with people. And they understand that the language also, like I said earlier, is let's break it down. Let's use normal, terms here and not speak, high-level stuff that people don't really understand. You also need to break it down to people properly. Half the time is even the language that causes that creates a barrier that we have. But if you can break the things, these terms down as little as possible, and people understand the value they are creating, because you don't want to be sell to people. You don't want to say stuff and people don't understand, and they bought into something that is not suitable for them because they don't understand what they're buying. So I'm just very, very critical. But I think we've made some progress. We've made a lot of progress in that regard. And people should trust the industry as a whole, because it takes both parties for us to grow.
Now, Nee, we're talking about wealth creation. Do we have types of wealth? What are the types of wealth that we have? And why I'm asking that question is for you to be able to classify them, because I also know that in the Nigerian context, some people will say, I don't have money, but I have a good name. And that is a form of wealth. I don't have money, but I have a good name. So you may not have physical wealth, you may have social wealth and all of that. So classify for me the types of wealth. And are they monetizable? Yeah. Are those wealth monetizable?
Okay, so yes, you're correct that there are different types of wealth, but if you are able to exchange for value, because at the end of the day, your value will be your net worth, which would be your assets less your liabilities, and then what's the net value, and then depending also, how it's been valued at every point in time. But the point is that it's going to be your net worth in terms of the asset and your liability. But who have social capital, you must be able to generate something from it. What's it worth? Can you trade it? Yes, we are very advanced now where we can trade the IPs. But the point is that, is it tradable? Are you able to generate income from it? What value can you generate from that social equity that you have? So beyond that, wealth is as I said earlier, is the value that, or your worth as a person, and that everyone can define it, any whichever way you want to define it. But the question is, it has to, come to terms with assets in all traditional and non-traditional, and ability to be able to value them. If you have an asset and it's not valued, it cannot be traded. How exactly do you say you own something, right? So let's say what you own, as long as the market for it, and then it can be valued and you can exchange it for value. Yes, you have something. And beyond that also, as you said, in the olden days, someone says, I have plenty clothes, it's value. How much are they worth in the market, for example? So it must be marketable, it must have a marketplace, and that would then define the size of what it is to you. But just to put a summary to what wealth is, it's your net value, net worth, your asset less your liability, and how much is left. Because a lot of the time, some people say, oh, I'm very rich, and then but they don't want to talk about their liabilities. And someone has, assets worth 100 million, but also has liability worth $1 billion. It's exactly what's your worth that way. And when it also comes to that, I don't want to I don't go into valuations, but the point is that it's simple. That whatever you own is valuable, is sellable, is tradable for value, to form part of what you're worth. But also as human, we also got something, because we have such capacity. And that also in today's world can be valued, can be traded in markets across the world. Even if it's hard work, whatever it is that you own that's tradable is worth something and can form part of your wealth. So traditional asset, non-traditional asset, all form a part of what an individual owns and can also be valued as an asset. And that means it can form basis of what creates what your wealth means.
What do Nigerians do now in this uncertain time? How do we preserve the wealth that we have, however, how much money that you have? How do you really preserve it, that inflation does not erode the value of your money? I understand that it could vary for people, but is there a general sense right now by which we can preserve our money so that inflation doesn't erode it? I say it sometimes on the show, and the banking guys will not like me. Don't put your money in a bank right now. It doesn't make sense. I don't know if you share the same view.
So for me, it depends. So really, it depends on where you find yourself and where you are at the moment. If you need liquidity, you need cash, obviously you need to keep it close to you as much as possible. But if you don't need it, then you have to put it away. And also, it's a function of, as I said earlier, your risk and ability, what you can take. There are options. As of yet, as in the last auction, CPI risk and Treasury risk about 7%. It's far away from 16.6 level of inflation. But for me, primarily for every investor, is you try to close the gap, as much as possible, and then keep a diversified portfolio so that you can at least, be able to absorb the shock, over time. Because if you invested in one class of assets, say for example, you put all your money in, say, real estate, for example, and in difficult times like this, your tenants are not able to pay rent. How exactly do you survive? But if you're able to invest some of your monies, depending on your risk appetite, by the way, in real estate, fixed income, in equities, in commodities, and by the way, for inflation, to brace up against inflation, commodities and real estate can play a very big role. But ultimately, for me, I believe that it should be diversified portfolio. We should be looking at holding, some equities, some fixed income, also some alternative investment like real estate and commodity-backed investments, so that at least that can help you cater to the shock when those externalities occur. But so that's what I think is primary, right?
Okay, from what you've just said right now, should I take it to mean that this is what a diversified portfolio should look like to beat inflation? Or would you give me okay.
That's so that we don't get ourselves in trouble. We're not all in the same situation. What works for me may not work for you. And that's just takes us back to the fact that you need to speak to professionals. It's just the best way to go about it and the easiest way to go about it, so that we don't make an assumption. The scenario I said now may not work for me even, but the point is that even while that's fine, the baskets are different for every individual. But the point is that you must balance enough so that you can, withstand whatever pressure that's coming from either inflation or from the currency side or whichever, way it is coming from. It's also important that you understand that what you are holding will determine the outcome. If you are, for example, holding, as I said earlier, maybe real estate, for example, and, the shock affects you greatly and you're not able to survive. And for example, if you're all invested in equities and market prices are coming down, very quickly, you also have impacts. So, but the balance would help. It's very unlikely that, in some cases, that everything would go down at the same time.
Niyi, I understand your position, and I understand why you said we shouldn't put ourselves into trouble. But I would like us to zero in a bit, and zero in based on statistics or data. For example, is there a way we can say, okay, the Nigerian stock market, for example, has done over 20% year to date? So is there a way we can say that, the Nigerian stock market is one avenue whereby if you invest, you can beat inflation, but you've got to seek investment advice to know the particular kinds of stocks that you will invest in? That's one. Okay, the savings bonds or the bond market, that's actually what, in terms of data, that these are categories of markets that at the end of the day, if you put an aggregate, it's beating inflation. So it's no brainer. But ultimately seek investment advice.
Definitely, you're correct. Yes, but with equities, as you said, it depends. And so it is with other class of assets. So I said, I think real estate is can provide a great protection in case of inflation. Also, commodities will do that. And beyond, also, if you have obligations in other currencies, it's also best that you hold, your assets or your cash in those currencies, so that when the obligation arises, you're able to quickly, pay them off in as much as possible. When it comes to specifics, yes, you can get protection everywhere, but some just protect you better than others. Alternative investments only protect you more because, for example, if you say you have to trade in commodities, maybe from food items, for example, people would always eat, which means that even when it comes very difficult, you are still able, but then they're highly volatile also. You have to understand that there's a risk underlining, all of this also. So yes, if you agree with you that real estate will give you maybe more better cushion because you can always review your rents from time to time. If it allows you, it has flexibility to review your rent from time to time, that will protect you because you're able to adjust accordingly from time to time. And then as I said, like commodities also, commodity-backed investments, will also help, and equities to a great extent, depending on direction. But very importantly, again, is that you get guidance. I think I want to stick to that as much as possible, so that you don't, do what won't suit you. And then one of the things that you also be mindful about is liquidity. If you're going to need your money in 6 months, or in 1 year, or you're in 5 years, also determine time is also very important, and liquidity of the asset you're investing. Because what you find a lot of times is that someone comes and says, "Oh, I want to do this, I want to do that," and then you advise, and you don't have a full picture. And 2 months down the line, they want their money back. But these assets are very volatile, and they may lose some value there. So we can look at it from that point of view, from the alternative investment side, then traditional investments, being lower side of things, style protection.
Okay, Niyi, as we round up this interview, and in the next 1.5 minutes or 2, if you can you speak to us about perhaps some daily money habits that we need to imbibe? Because we can't say you are creating wealth without you abiding to some principles. Are there some daily money habits that are like general that we can imbibe?
Yes, definitely there are habits that one can imbibe. You have to start with planning properly, and also, creating some sort of template that allows you to know how much you save depending on what you do for a living, whether you earn daily or you earn monthly, how much you put away at every point in time, what you put those money, what investments you put those money into. And more importantly, also is not impulse buying. I know that a lot of noise out there. Also, you have to minimize your expenses as much as possible. Some jurisdictions, they'll be like, don't buy what you can create. So you want to make your lunch. They're very simple stuff, for example, but in the long run, you generate a lot of value from them, because the less you spend, the more you would have, to put away. So whatever it is that would allow you to spend, not necessarily, maybe not making someone comfortable, but within your comfort zone, how much can you spend lower than, expected? And that would help you over time create value. But what will create value for you is putting that money away in investment vehicles that would give you a compounding value over compounding effect over time, so that you have to compound whatever it is you put away over time to generate wealth, which is very critical here. But daily, you can ensure you spend as, I know it's tough right now. Prices are very high, but at least for now, try as much as possible to avoid even touching what you already have. And secondly is putting as much as you can away, for the rainy days ahead. And in terms of everyday living, just avoid everything that you take. Somebody will say that if I step out, I spend money. So I think just stay at home so that you don't spend anything at all. But critically is that we try to live within our means also. So very critical. Living within your means and not doing what you read, taking up, buying or doing things that you really don't need at every point, at every time. Away from that, I think that everyone just needs to be very careful. I know it's tough and it's difficult times. Just align, to what's the reality. There's always an alternative to what you want to buy or what you need. Something sells for a higher price, and that's an alternative, and it performs the same function. Why not just consider it? And in today's world, some people say that why don't you want to stagger your purchase over time, doing buy now, pay later? If it works for you, because what it means is that you're able to lock in price today at the current level. And if the window accounts that the society where you say, oh, our interests are going, your rates are also going up, but just consider it, in 360 view of where you are. And that would help, to minimize your costs and also improve your savings. And ultimately, if you put that in the right vehicle, it will grow over time gradually, very important.
Thank you very much, Ni, for your perspectives this morning. Thank you again, and have a lovely weekend.
Thank you for having me. Thank you.
Yeah. I've been speaking with Adeniyi Adebisi, who is the Wealth Advisor at Meristem Wealth Management, and we've been talking about money management principles of wealth creation strategies. So you've heard it from there. The cocoa of the matter is that you should be interested in managing your money. Whether you're making 5,000 or you're making 100K or you're making 100 million, you've got to be interested in managing your wealth. And that's why shows like this are very important. Don't just, hold it to yourself. Share, especially this show. Go on our YouTube channel, get it and share. Just before we go, there's a breaking news coming that the court has remanded the former Accountant General, Ahmed Idris, that is the former Accountant General of the Federation, Ahmed Idris, in Kuje prison for alleged fraud. We'll continue to follow this situation. The court has remanded the former Accountant General of the Federation in Kuje prison over alleged fraud. That's it. It's a wrap today. It's a wrap this week. It's been nice having you all through this week. Thank you for your company. Please join us again next week. I'll be here, God willing, Monday to Friday. Other guests, other topics. Be the best you can be. And but that change that you want to see. Have a fantastic weekend, everyone. Bye now.